Hello, Avram friends. You probably heard the saying that history often rhymes. And in the world of investing, this is especially true. While economic crises sound terrifying, they're actually the best moments for investors to learn. So today, we're going to look back at three major events that shook Indonesia's economy: the crisis of 1998, 2008, and 2020. The goal isn't to scare you, but to see how investment I've often considered boring, like deposits, bonds, actually stepped up to become heroes. Let's start with 1998, a crisis that perhaps left the deepest impression on our parents' generation. The main challenge was during that era of hyperinflation. Prices skyrocketed and the rupiah value plummeted, causing the public trust in the financial system to collapse. To fight this, Bank Indonesia took an extreme measure, raising interest rates massively. As a result, bank deposit rates soared to an incredible 60% per year, a number that is unimaginable today. At a time like that, the hero asset was cash. Those who held cash and saved it in a deposit managed to protect their money value from being eroded by inflation, while also earning incredibly high normal returns. And this is the valuable lesson of 1998. It is precisely when the economy feels the most fragile that the strength of safe assets shine the brightest. In the midst of crippling inflation, high-interest deposits were no longer just a tool for survival. They become a financial fortress that turned defense into returns. Now let's jump forward 10 years to 2008. This time, the crisis originated overseas. It was a global financial crisis that started in the United States. The challenge was different. In Indonesia, our banking system was so much stronger. The biggest impact was felt in the capital market. Our stock index plummeted by more than 50%. Stock investors suffered huge losses. So, where did investors seek protection? They did what's called a flight to safety. They sold high-risk assets like stock and moved their money to assets considered the safest: government bonds. This high demand kept on prices stable, and in some cases even pushed them higher. The lesson from 2020 is crystal clear. When stock plummeted, investors run for cover, and the safest place at the time was government bonds. Bonds became more than just a buffer against losses. They became powerful stores of stability. This is their true role: to be the bedrock when the waves of the stock market are at the most ferocious. And the most recent one, the 2020 crisis caused by the pandemic. This was truly a unique crisis. It wasn't because of banking or stock market problems, but because of a global health crisis that forced the entire world to stop. The main challenge was total uncertainty. No one knew when this would end. As a result, everyone needed one thing: cash that could be accessed as quickly as possible, just in case. This is where money market funds emerged as the hero. While the stock market and even the bond market was volatile at the start of the pandemic, money market funds remained stable and, most importantly, highly liquid or easy to cash out. They proved their value as the most ideal home for an emergency fund. And the final lesson from 2020 is the most fundamental one. The pandemic crisis proved that a safe and liquid emergency fund is no longer just a financial advice. It has become the very foundation of our financial house. Without a foundation that can be accessed at any time, the entire structure can collapse when an unexpected earthquake hits. This is a lesson about building financial resilience from the ground up. So what we conclude from these three major events? The 1998 crisis taught us the importance of time deposits when fighting high inflation. The 2008 crisis taught us the importance of government bonds as a balancer when the stock market fails. The 2020 crisis taught us the importance of money market funds for a liquid emergency fund. The main lesson is crises never come in the same form. Therefore, our financial fortress must also have multiple layers, ready to face various scenarios. But building all of this in your own certainty isn't easy. It requires research, time, knowledge to choose the right assets. And this is where we at Avram came in. Our investment team learns from this history to design solutions for you. First, to face a sudden uncertainty like in 2020, we provide liquid and stable money market fund products, specifically designed to be the foundation of your emergency fund. Second, to act as a portfolio balancer when the stock market is volatile, as we learned from 2008, we formulate the fixed income funds. Their portfolios contain select government and corporate bonds that we have analyzed in depth. Our job is to do the complicated work, analyzing and selecting the best assets, so you can build your financial fortress with more and ease confidence. History has given us valuable lessons. Now it's time for us to take action. Start building your financial fortress with Avram today.
Thanks for watching. Jangan lupa like dan subscribe agar kamu gak ketinggalan informasi menarik lainnya. Sampai jumpa!